Thank you. Thank you, Mr. Speaker. Yeah, Mr. Speaker, going back and as I was saying, and thanks very much, Mr. Speaker, because as I was looking at that motion, I realized that I'd also found we had filed a motion dealing with lands and survey and making changes there too. But this refer back, Mr. Speaker, the private member's motion number 7 of 2017, which was actually tabled in the office of the clerk on the 10th of August 2017. And the motion basically called for banking reform select committee. And that motion basically asks, in those to resolve, without going through the long motion, Mr. Speaker, was that it asks for this resolve that this legislative assembly considers establishing a select committee of 6 members, 4 from the government and 2 from the opposition, to review the current policies and legislation governing banking, credit, regulatory capital of banks, and to make recommendation to implement and improve legislation and policies that will be fair and balanced to banks and their customers before March 31, 2018. At the time, Mr. Speaker, when that motion was actually filed, the one thing that actually triggered that motion, and this is the point that I wanted to make before I get into the substantive area of my speech, was, generally speaking, banks operate looking on a return on equity, or pretty much a return on their shareholders' equity in terms of from that regard. And one of the things that had jumped out to me at that time, Mr. Speaker, was the CIMA report, the CIMA annual report from 2016. And just to put it in context, at that point, they had reported a 13.3 return in CIMA's report, return on equity for banks. That had actually caught my attention for the simple fact that most of the time, banks at the time used to operate between 8 to 12% return on capital, return on equity. So when I saw the 13.3% in 2016, that kind of jumped out at me at the time, which actually triggered the filing of that motion. And to put that in context, Mr. Speaker, just going back to CIMA's annual report, for 2013, within the banking industry, the return on equity was 8.4%. For 2014, it was 8.1%. And for 2015, it was 11.2%. So when I saw it jump up to 2016 at 13.3%, that is pretty much what it was that triggered my filing of that motion at the time. Because now I saw where the banking sector in Cayman literally went outside or above the normal 8 to 12% return. And ironically, Mr. Speaker, for 2017, and again going by CIMA annual report, the actual return on equity for banks, and for the listening public, just to put that in context, if you have 100 million in capital and your net profit is 10 million, that's a 10% return on your shareholders' equity. In other words, that's a return that you're giving back for people who have made an investment in your company. And put that also in context, CUC operates between 11 to 12% return on equity also for their shareholders, just to put again in context so people can understand what numbers we're working with. When we say 10, 11, 12%, how does that factor in? So going back at it, Mr. Speaker, so for 2016, when I saw the 13.3%, that caught my attention. 2017, it went to 13%. 2018, it was 15.3%. 2019, it was 17.9%. And this again from CIMA's annual report. For 2020, it went down to 5.3%, and I guess we all know why. By 2021, it was up to 13.8% return on equity. For 2022, it was 18.3% return on equity. And now, for this year, well, for the last report that was just tabled in the House last week, for 2023, the actual return on equity for the bank shareholders was 25.3%. Now, that is more than twice even CUC's return that people complain to CUC about. To also put that in context, Mr. Speaker, for 2023, looking at Cayman's 25.3% average across the banking sector, in the US, the top 100 banks' return on equity was 11.4%, again within the 8 to 12% range. In Canada, the number 1 bank was actually RBC in terms of performance. They had 14.2%, and Scotia was actually number 2 at 13%. So the largest bank in Canada, the most profitable bank in Canada in 2023 was RBC, and they had 14.2%. And Scotia was right behind them at 13% in Canada. But yet, our banking sector, 25.3%. If I look at the United Kingdom, HSBC was the top bank in 2023 in terms of return on equity, 20.8% return. And behind them was NatWest at 18.2%. But yet, here in the Cayman Islands, 25.3% return. And as the Honorable Leader of Opposition actually mentioned, the banks, during the low interest rate environment, basically started charging a lot of fees for a lot of things. And as the interest rate started to go up, rather than start reversing some of those fees and reducing some of those fees, they basically left the fees in place, and on top of that, compounded with the interest. Thus the reason you see the performance that we have here today. And this is not to say anything against banks, because I'll be the first to tell you, banks at the end of the day, like in the corporation and the company, has a responsibility to the shareholders. But at some point, we do expect people to still be good corporate citizens. And 25.3% return in this environment, when globally, no one else is hitting those kind of numbers, it is something that we in this House need to look at carefully. Thus, the timeliness also of the Honorable Leader of Opposition motion. Because I can tell you, if I had known that this was going to come at 25.3%, I would have been filing a similar motion to myself. But I only saw the report recently when it was pushed out there. Mr. Speaker, banks in itself generally offer 4 services. They do deposits, they do lending, they do payment services, and they do currency exchange, foreign exchange kind of stuff. Some other banks go on to basically do investment services, risk management, and also in some countries they work in terms of implementing monetary policy with the central bank and so forth. Here in Cayman, we don't have any of those kind of major issues. We have a stable currency. It's been stable since 1972. And the very exchange rate between CI to US works out to literally 3.2%. Mr. Speaker, we have reached a point right now where at some point something needs to be done. And the truth of the fact, ladies and gentlemen, the banks aren't going to do it. They have gotten used to a certain pattern, and at the end of the day, it's very difficult, other than maybe having some level of consumer policy and everything else, that we are looking for consumer protection in terms of some services. We're not going to get what we want from it. And here's the biggest challenge that we have in the banks. If you look at CIMA's website, looking at Q3 2023 was the last quarter that they reported. The total amount of loans that CIMA had, that residential loans, and I'm going to explain to you why I bring that up shortly, was just under US $3 billion. So if you go to CIMA website, of all the loans issued by all the Class A retail banks, it was just under US $3 billion. Equally, if you go to the same time period on CIMA's website, you will see that the total deposit for households was just over $3.3 billion. Now, generally, Mr. Speaker, there's a general rule in bank that if you have $100 million in deposit, you don't lend all of it out. You normally will use a conservative amount to say, I will lend 40, 50, or 60%, depends on the track record and everything else, but you refer to as sticky deposits. You do not lend out anything above 60%. Most banks would not lend out in terms of being a conservative approach. So if you want to talk just on a pure asset to liability management, we have a domestic market of $3 billion US in loans and $3.3 billion US in deposits. Simply put, Mr. Speaker, our domestic lending is actually driven by a lot of commercial deposits. And that is where the risk comes in. Because as banks start moving from Basel II to Basel III, and they start looking at commercial deposits, they are now being treated differently. And the reason that would actually trigger that, Mr. Speaker, is that it was those commercial deposits as part of the reason also that triggered the banking crisis. And I explain to you what I mean by that. You have money that you refer to as professional managed money. So if you even have, when I say professional managed money, when you have a large amount of money, And some members may understand what that is. You have 10, 20, $30 million sitting in a bank. If someone offers you half a percentage point more, you probably will move your money. Because for that size of volume, that's a lot of money. If you got $100 and someone say, I give 5% more than that, you're not even going to fill out the paperwork. It's not even worth it. So you generally stay away from professional managed money as much, because that money or those deposits can just move literally overnight. So when you understand the Cayman banking market and you look at the billions that the bank have, up to almost 15 billion last time in terms of assets, a lot of that is corporate money, is professional money. It's not much money that banks can do much with. And if you just look at our domestic market as is, we are literally fully lent in terms of domestic assets and domestic liabilities. In terms of non-commercial assets, non-commercial liabilities, we're literally fully lent. 3 billion to 3.3 billion, there's not much room left to play with. So now you're going into a different kind of money, which attracts a different kind of rate, and you start creating more liquidity issues. The real solution in all of this, colleagues, is what I mentioned last night, is at 4%. And I can tell you, one of the best motions that I've seen arrive in this House in my 7 years actually came from the member for Georgetown North. That motion that he brought regarding government basically assisting in terms of helping people to get homes built. Not just taking the GGM program of guaranteeing the mortgage, because it makes no use to guarantee a mortgage if there's no houses being built. So you need to step back a little bit, and that's one of the things which I also touched on when you look at the census information I brought last night. When the population increased and the amount of homes that built, we had way less homes being built as the population grew. So clearly we have a housing shortage in Cayman. And again, it goes back to the point. We have the net debt at 4.1% when the FFR ratio calls for 80%. Those are the kind of initiatives that we're going to need to do. In the United States, almost 55% of the mortgages are owned by the federal government, between Fannie Mae and Freddie Mac. Fannie Mae, as it stands, was created back in 1938, almost 86 years ago. You know, Freddie Mac came around in 1970, 54 years ago. These are institutions that have already been built, and here we are now. 86 years since the creation of Fannie Mae, 54 years since the creation of Freddie Mac. The UK government, every other progressive country, these are things that they do. And these are the kind of stuff that we need to start looking at. You know, let the bank carry the load for the first 10, 15 years of a mortgage. By then, a lot of the risk would have fallen away. The loan to value would have been built up. Let the government then step in. Those are secure loans. Those are loans where the house is valued $600,000. You may balance $200,000 on it. We can take those kind of risks and give people a lower interest rate at the same time too, because they've built up their credit, showing after 10, 15 years of payment. That's what that 80% margin can actually work for us. I've been sitting down here and telling people we have a 4.1% on the FFI ratio when it allows us to go to 80% and people are struggling. It makes no sense. So rather than sit down and look for the banks to actually be the savior, which they're not going to be, we need to sit down here and actually put that in place for ourselves. And that is ultimately what we need to do. So I would ask the government at this point is to basically go out, look at getting a bond, see what interest rate we can get in terms of with our AA3 rating, see what we can get. If we can raise $400 or $500 million, fine. We turn around, we have our own development bank, and we can say at that point, we can set the criteria. If you have 15 years of mortgages that came on and already paid up, you have already proven that you're in good stead. You know, let us go around and say, well, let us charge an extra 0.5% above what we are paying for it and give it to those good customers. We have an aging population. If you look at the election list, the average voter age right now is 53. As per the April 1st list, 53. That is 12 years pretty much from retirement. You know, and now I have people in their 60s still paying a mortgage and can't afford a new payment. Why? And they can't refinance past the age of 65 for some institutions. So this is the kind of things that we need to sit down and start looking at, ladies and gentlemen. You know, well, reverse mortgages is definitely one of them too. Honorable Minister, but I'll get into that in a different debate. But I'm just talking for an immediate relief right now of what we can do. Because good paying Caymanians, Caymanians who have paid their mortgages for 10, 15, 20 years are struggling right now on no fault of their own, other than the fact that we have imported inflation in this country. And I'm appealing once again, go out, get that 200-300 million. It may help 100 or 200 families. If we can set the criteria. Say at least 15 years paid up, your loan to value can be this, that, where the public isn't that thing. And we can offer people solutions. That's what it's going to take. The banks aren't going to do it, ladies and gentlemen. They're there for their shareholders. I can tell you, I used to work in a bank in a previous life. And I can tell you, our first responsibility was to our shareholders. It was not to the public. So we are asking the banks to do something that the United States recognized 86 years ago, coming out of the Great Depression. The banks couldn't do it. The government had to step in and do it to help people. It is us inside here that guarantees that people should have a home, not the banks. And since we're the ones who want people to have a home, then this is our responsibility to make sure that people have a home. It's not the banks. We have, so we can sit there, we can go through this, and I can say, I filed this motion 7 years ago. It's not going to change. We need to take action. So to the Honorable Acting Premier, I would say to you, as the Minister, well, Acting Minister of Finance also, look at what we can do. I tried my best when I was there with the Cayman Development Bank. They were willing to lend us $100 million at 4.75%. And the goal was then to turn around and charge people above the age of 60 with a lot of equity built on their own, 5.25%. That would have saved them hundreds of dollars a month in mortgage payment that some people can afford. Unfortunately, that went nowhere. You know, so these are the kind of solutions that we're going to need. If not, what's the use of going out and telling the people that we have a ratio that is 4.1% when we can take it up to 80? Let's carry it up to 20 or 30% and help our people. But Honorable Leader of Opposition, I want to thank you for really and truly highlighting back this issue of what it is there. But I can tell you right now, guys, 25.3%. When you hear people talk about inflation, I'm going to leave you one word before I leave. Greedflation. Google it and see what it means, because that's what is driving a lot of the prices here. Thank you, Mr. Speaker.
Does any other member wish to speak? Does any other member wish to speak? The Honourable Member for Newlands.
Mr. Speaker, thank you very much. Appreciate the opportunity to make a short contribution. Mr. Speaker, I have in the past, as the Minister for Financial Services, Commerce and Environment during 13 to 17, had to deal with issues like this that are contained in this motion from the Leader of the Opposition, seconded by his able deputy. In that era, or that time frame, Mr. Speaker, the issues were driven by economic conditions and what was the global financial crisis back then. Today, Mr. Speaker, we have been challenged by the issues around inflation, which obviously took off considerably because of global political uncertainty. Mr. Speaker, in my first term as that minister, the Honourable Leader of the Opposition was obviously a colleague. He was actually my counsellor at the time, and we worked very well together to try to address issues back then. And I'm happy to tell him that I rise to support his motion again because I think clearly there are continuing issues. The challenges that we have in being able to address these continue to be difficult issues to overcome, in the sense that we have a regulatory system that doesn't easily facilitate it because of the fact that CIMA, or the Cayman Islands Monetary Authority, is not a central bank and doesn't have, I think, similar financial conduct authority and perhaps tools that, for example, the Financial Conduct Authority in the United Kingdom has available. And of course, they also have a central bank with the Bank of England as well, which has rate-setting authority. So, Mr. Speaker, we have challenges, and we have to do our best to find solutions. Some of the solutions involve continuing to engage with the banks, continuing to ask for concessions or actions which will help. Mr. Speaker, what we have today, and based on discussions with the Bankers Association over the last, well, let's say during late 2022 into 2023, I shouldn't say late, it was probably mid-2022, is we have indications that their mortgage portfolios are not suffering, that they're not underperforming from their perspective, meaning there's not a high level of defaults. But what we do know, Mr. Speaker, is that we have, because of the significant increases, the rapid increases that the Leader of the Opposition mentioned in the motion, 11, I think it was, increases over a period of less than 2 years, that significantly ramped up the cost of mortgages, the payments being made. And in addition, for the same factors that was driving that has also driven significant increases in other areas of cost of living. So our people, Mr. Speaker, are facing and have been facing considerable pressures, even though perhaps, and I do agree, the Leader of the Opposition mentioned that banks were granting probably more accommodations than they have historically done in terms of setting fixed rate mortgages for a period of time. And I agree, I haven't heard of any more than 5 years either. It was usually somewhere around 2, 3, maybe 4 years, somewhere in that kind of range. And that has helped, Mr. Speaker, there's no question about it. It has helped. We have also had, I think very helpfully for many people, we've had a credit union that has taken a position of absorbing some of the rate increases and fixing their rates a bit lower than the prime rates that the other commercial banks, or I shouldn't say the other commercial banks, the commercial banks, because credit union is not a bank, much less a but it's an institution that has helped people, Mr. Speaker, for the same reasons they've, but they can do it on a longer term. They've been able to grant mortgages which cost people less. These are all things that, while they help, we still are in a high cost environment, for everything else, and we all understand that cost of living is a major issue for Caymanians. So anything we can do to assist, even if it's in small ways, we should consider it. The member from Bartontown West, in his recently just concluded contribution, noted other ways of addressing the issue in terms of supply. That is worthy of consideration as well. Mr. Speaker, I agree with the leader's proposal in terms of having a review committee. Certainly, as somebody that has spent quite a bit of time looking at these issues and trying to find ways to help our people, I would be happy to assist in any way that I might be able to add value. But Mr. Speaker, I also want to thank the acting Premier for his indication that the amendments to the Registered Land Act relating to the residential mortgage amendments, that, as the Leader of the Opposition mentioned, I had spoken to, I'm sure, more than a year ago, and it feels to me like it was probably 2 years ago. I'm happy to hear that may be coming forward finally. Mr. Speaker, I can tell you that it probably wasn't a single month that went by that I certainly didn't ask specifically for an update and seek to promote moving that along and trying to get that implemented, because I think that is very, very important. The recommendations that came from the really good work of the Law Reform Commission were, I think, going to be very helpful. That was something that I had tried to get done in the 13 to 17 period when I was the Minister for Financial Services. And I think it will add value and allow much more clarity and fairness in the process, because people are concerned. We've had numerous discussions in this House. We've all had numerous representations being made to us that people, that our constituents, our residents feel that there's something not quite right when they're in the situation where they're facing a foreclosure. So, Mr. Speaker, having these amendments in place that would provide a protocol when you're entering into a mortgage, provide the necessary clarity, provide a mechanism through which there can be certainty that the rights and the obligations of borrowers have been explained to them, and they can sign off and be comfortable that they understand what they are. As I understand it, Mr. Speaker, the intention is that there would be another protocol that comes into effect when and if, I should say if and when, there is even an indication of a possible default. You know, some red flags, some signs that a borrower is under stress. Maybe they're missing a payment. Maybe they're short paying and asking for forbearance. These types of issues. And included in that protocol, Mr. Speaker, must be obligations on the bank to be proactive, to reach out to their customers, to help them understand, perhaps remind them what their rights and obligations are, help them understand how they can help to resolve these issues. Mr. Speaker, all of that is, I think, something that will be very helpful. It will provide much more clarity and much more confidence in the process. Mr. Speaker, I think historically and even currently, we seem to have a much lower level of foreclosures than perhaps what happens in other major countries. But that is irrelevant when it comes to our people who are going through that process. Those statistics don't matter to them. What matters to them is whether they have something, some mechanism, some kind of leverage, something that's going to help. And I think this will help, Mr. Speaker. So I am grateful for the indication from the acting Premier, and I hope that it is certainly much closer to reality in terms of being brought down here as a bill with amendments to the Registered Land Act. Mr. Speaker, just going to spend a couple of minutes saying that discussions with the Banking Association, Bankers Association, have always, I think, been cordial, even when we are putting pressure on them, even when we're looking them in the eye and saying, look, as politicians, as a government, we're under pressure, so you have to respond. You need to help where these issues exist. They have, in my mind, typically responded to some extent, but I think that there continues to be ways in which they could assist. And I would hope that in terms of the consultation that has been going on with the Bankers Association on these amendments, I would hope that that is one way in which they would find the space, even within their commercial constraints and demands as outlined by the member from Boddentown West, that they would make some concessions and agree to put the people of this country, put those people in this country who are borrowers in the best position. Mr. Speaker, one of the regrettable situations, as well as those people who are in situations in the country where they find it difficult to make these payments, to make mortgage payments while they have all these other escalating costs, is that we have so many younger people and some perhaps not so young people who have been seeking to try to buy their homes, a lot of times for the first time. And the increased rates combined with the levels of general inflation have conspired against them. And we have all met them, we know them, and I've certainly talked to many of them directly. So that is, that we not only have people who are finding it difficult to keep the house, we have those that are finding it difficult to get the house. And anything we can do, Mr. Speaker, to help with that equation is appropriate. Of course, one of the challenges is not just being able to afford the mortgage, but the escalating operating costs, of which a large proportion is always typically going to be the energy costs. That's why, Mr. Speaker, in the past, certainly through the Ministry of Sustainability, I had a program in place to help demonstrate what investments could be made, either at the time a house was being built or even as a retrofit, that would significantly reduce the cost of utility bills and help to put people in a position where they could more comfortably, they could live more comfortably and avoid some of the escalating cost pressures. Unfortunately, I think that program doesn't exist anymore. But I think it's necessary to have these types of programs, Mr. Speaker, because many young people, and I counsel them as often as I can when they come and talk to me, that are looking to build or buy houses, they haven't had the experiences that we have, and they perhaps don't. They're thinking more in terms of having houses of a certain size, and which is fine. It's good to have that aspiration. I think the older you get, the more you realize that no matter the size of your house, you typically only live in perhaps a half of it or 3/4 of it. When they're building houses, Mr. Speaker, what tends to happen is they look to reduce costs, and the first thing they do is mistakenly reduce the efficiency of the home, efficiency of appliances, because yes, many of those appliances are more expensive, but it is better for them to invest there and end up with lower costs than have a bigger house. So, Mr. Speaker, I agree that the motion is timely. This issue may be mitigated in the coming, well, as we come towards the end of this year. It seems that perhaps the rate of inflation may be getting to a point where the U.S. Federal Reserve will start reducing interest rates. But I don't think that we can, there can be no guarantee of that. We have the situation we have today, and we have costs that our people have to deal with today. So I think we should continue to look for ways to address that situation, to help wherever we can, to help to rationalize bank fees and rationalize other costs of mortgages and even operating our homes. The whole banking industry seems to be evolving and going into areas that perhaps, particularly our older people, don't find convenient. And I know the Bankers Association had indicated that they were making specific provision for their elderly clients or their senior citizens, let's put it that way, to be able to continue to conduct banking business in the ways that they traditionally did it, the ways that they were accustomed to in the past. Perhaps that's not with 100% accomplishment. I think we clearly understand that there are constituents who feel that that's not the case. So the more banks can do to address that position and to redouble their efforts to ensure that our senior citizens do not have to deal with situations which are uncomfortable for them and highly inconvenient to them, that would be the ideal outcome, Mr. Speaker. So, Mr. Speaker, just in closing, I support the motion. We certainly would wish to see, even if conditions begin to improve in terms of interest rates, it probably is not going to go down as quickly as it went up, Mr. Speaker. So if that happens, we'll be lucky. But the reality is, what goes up in terms of costs usually doesn't come down. If it comes down, it's not that much slower rate. So everything we can do to help, Mr. Speaker, and I think this motion has the potential to put us in a position to specifically address some of the issues through dialogue and discussion, and if we can get the amendments to the Registered Land Act in terms of the mortgage protocols, both for people entering into a mortgage and where mortgages, where they may be getting into difficulties, that will be very helpful as well, Mr. Speaker. So let's hope that can come as quickly as possible. With that, Mr. Speaker, thank you very much.
Does any other member wish to speak? The Honourable Deputy Leader.
Thank you, Mr. Speaker. Mr. Speaker, as a second of this motion, I would like to rise and provide some brief comments on the motion. And I want to thank the leader, and the members from Newlands and Bordentown West who delved in and covered the main thrust of the motion. I also want to thank the Acting Premier for providing an update on where the government is on legislation pertaining to this, and also for confirming the government's support for the motion. Mr. Speaker, we should all thank him, because that allows me to put aside the first 2 pages of my speech. Mr. Speaker, the member from Newlands rightfully said that perhaps interest rates may be coming down, but I think it is important that we continue with this, as we know that everything that comes down usually goes back up. And we want to ensure that we're in a position in the future that our people will not have to go through the level of stress and frustration that they do currently. I join, Mr. Speaker, my colleague, the Leader of the Opposition. I join the Leader of the Opposition in confirming that, Mr. Speaker, we are not here to criticize the banks. Historically, Mr. Speaker, the banks played a crucial role in our economy and have been an important institution in the growth of our islands. There is no doubt about that, Mr. Speaker. But however, while I acknowledge the value of our banks, I also understand that we must ensure that customers are treated fairly. Mr. Speaker, the banking landscape has changed and continues to change, and we all see it. Branches are closing, some services are being reduced, banking fees have increased, and also, Mr. Speaker, as the Leader of the Opposition noted, the bank's head offices have reduced the local decision-making, and some have even moved jobs overseas, Mr. Speaker. And given the complaints I hear from the public, reduced local staff and services have led to a decline in customer service by the banks. And these are jobs, Mr. Speaker, that were generally enjoyed by our Caymanian people. Mr. Speaker, Banks are no longer just convenience or optional. You can't live without them now. Whether you're a businessman, you can't do anything. You can't apply for anything without a bank account. You can't even receive cash or pay anybody without proof of funding or proof of revenue. So we're all faced with the challenges, the banks. They sell you checks, then they charge you for using them. The very people that we are trying to help, those who you are helping, have all had to open bank accounts because you could no longer cash your check. So you pay the fees, you pay your taxes, and then when you take your check in and you go get your money out, they charge you for that too. If you cash your check to take it home, they charge you for that too. It's a tax. It's a tax that not even the government are getting a benefit from. It's a tax that the bank is taking. It's a bank state. Mr. Speaker, they started to charge you exorbitant fees, they said, in an attempt to encourage you to go online and to use the little ATM so they could save on real estate, save on labor. But then now they charge you for every time you use a debit card too. They charge you put in money, charge you take out money, charge you every time you buy something with it. So they have realized their efficiencies. They have forced us all to become technology people. Thank goodness my phone, now I can just use my thumb. I don't have to remember the passwords. And my wife has a very good memory, so she remembers them all for me. Otherwise, I would be lost. Mr. Speaker, there was a time when you got in trouble or you wanted to start a business, you go into the bank and you could sit down with someone you knew and talk about it. Today, unfortunately, and this is a personal experience of mine, today, unfortunately, you're going to see someone and they may lead you, not all banks. This one I went to did it. You think you have an appointment with someone, they take you into a room, that person sits down and does their nails or watches reels, and they dial somebody in Trinidad or Barbados. And that's your bank appointment with your local bank, talking to somebody on speakerphone in another country, another side of the Caribbean. So, Mr. Speaker, they are becoming like, I think the member from Bordentown West, they are becoming like a utility company. But who is monitoring them? They scrutinize utility companies, they hold them to licenses, but who's doing so with the banks, Mr. Speaker? So, Mr. Speaker, the banking landscape has changed. Notably, Mr. Speaker, the need for banks to ensure that they treat our customers fairly, our people fairly, including borrowing customers. Mr. Speaker, over the past 2 or so years, we have seen that banks have no communication. Sorry, Mr. Speaker, have no hesitation or compunction in raising loan and mortgage repayments as swiftly as interest rates in the U.S. may increase. It understood that in times, Mr. Speaker, in times of rising interest rates in the USA, banks have no option but to follow suit. But, Mr. Speaker, this practice must be addressed to ensure that there is fair treatment for all customers. Mr. Speaker, banks should question what they are doing to customers financially by increasing mortgage or loan payments to amounts the customers cannot afford. Couple that with insurance rates going up another 40% this year. And those customers have to have insurance to cover their mortgages. It's interesting as well, Mr. Speaker, what I find is that if a couple gets a mortgage for $500,000, both couples have to get insurance for $500,000. Both persons, sorry, both persons, well, we are in 2024, Mr. Speaker. both persons have to have a mortgage to cover the life insurance to cover the mortgage. Mr. Speaker, in granting a mortgage or a loan, the banks assess the customer's ability to afford the loan payment. They are aware of what the customer earns. The first reaction in times of rapidly rising interest rates should not be to drive up payment amounts over and over again and then leave it up to the customer to come pleading for relief. This is where the responsibility comes in. Given the bank's vital role in society, Mr. Speaker, we cannot ignore all of these concerns. We must examine these issues closely, and we must determine how to ensure a fairer balance between the best interests of the banks and their customers, our people. Mr. Speaker, banks should be encouraged to be involved in that process. As opposition leader noted earlier, we strongly advocate for the establishment of a Banking Standards Review Committee. This committee, Mr. Speaker, comprises the Bankers Association, the Cayman Islands Monetary Authority, and an expert from the UK who will review the UK's customer duty of care for banks and recommend suitable rules for our own updated banking code of practice. Mr. Speaker, the committee findings and the report should be presented directly to the Parliament for consideration. This underscores the importance of this proposal, Mr. Speaker. Mr. Speaker, the opposition leader has made the case for the main thrust of our motion today, so I will dive deeper into what any bank review committee should consider. First and foremost, the consumer education and financial literacy, Mr. Speaker. We must develop financial education programs in collaboration with banks and the government. Workshops, seminars, and online resources can help customers understand the benefits of general financial products, manage debt, and make informed decisions about their economic lives. It would be fantastic, Mr. Speaker, to see a version that could be used for our high school and university students. I heard one member across the aisle said primary school. These won't happen overnight, but if this House, Mr. Speaker, wants them to happen, then they will. In the spirit of balance, Mr. Speaker, I'd like to note that this week I learned that one local bank offers a financial management course to university students. This could be a valuable starting point for developing public education on financial management, Mr. Speaker. And I encourage the government and the Bankers Association to consider including the topic in their future discussions and how we can expand that into our schools. Mr. Speaker, another area is enhanced customer service standards. Mr. Speaker, banks could establish dedicated support teams for customers facing financial difficulties, providing personalized advice and solutions. Regular customer feedback surveys can gather insight on services and identify areas of improvement, ensuring banks better meet customer needs. And as much as we would like, Mr. Speaker, for persons to go in right away as soon as they're starting to have difficulties, our people are proud, and they often will fight and pray and believe that they will resolve the issue and will continue to do so to the last moment, at which time desperation has pushed them in to seek help. But, Mr. Speaker, banks should also be required to maintain a suitable level of in-branch banking for older customers who are uncomfortable with online banking or need to transact face-to-face. Mr. Speaker, I've noticed now some banks don't even have dedicated parking for senior citizens anymore. This is a new, but you can't get parking at all, but there used to some have for senior citizens. I see some are converting for electrical cars, but there are some that have no parking for senior citizens. Mr. Speaker, most of these are retired with non-complex banking needs and have likely been bank customers for their entire lives. Next, Mr. Speaker, is support for small businesses. subject near and dear to myself. Banks should work with the Chamber of Commerce and the Small Business Association to develop financial mentorship and advisory services for small businesses. Mr. Speaker, we have the Center for Business Development. I've seen recently that they have held some seminars on financing, etc. But we anticipated when we developed that program under your leadership, Mr. Speaker, that there would be a much closer working relationship between the banks and that center providing financial support for our young entrepreneurs, or not just young, for our entrepreneurs. Mr. Speaker, in developing, the next area is the regulatory support. Mr. Speaker, and in developing legislation to underpin an updated banking code of practice, suitable but solid regulatory oversight will be necessary to ensure compliance with the fair banking practices contained within the code. I will refer to it again later, but a process for approving new or increased bank fees should be considered. Regular audits, penalties for non-compliance, and public reporting of banking practices can ensure fair treatment for all. I recognize, Mr. Speaker, and support the regulations being right-sized for our needs. But, Mr. Speaker, we must also ensure it works to protect consumers and promote a fair banking environment. Another area to be covered, Mr. Speaker, is the emergency relief measures. Mr. Speaker, given that we have all collectively experienced during and after the pandemic, given what we have all collectively experienced during and after the pandemic, banks should develop agreed crisis response mechanisms for economic downturns, natural disasters, or other emergencies. I recall, Mr. Speaker, how before the COVID lockdown, you led our government in preparing for what would be or could be coming. That included, Mr. Speaker, conversations with banks and utilities about how to support their customers. Mr. Speaker, there was no pushback, and I commend the banks and the utilities for acting in the common good. So it seems sensible to me, Mr. Speaker, that the experience learned during the COVID-19 pandemic can be used as a template for developing what a response to disaster could look like. Temporary relief measures such as loan forbearance or fee waivers, these all can support customers during crises and should be a part of the tools used. Of course, Mr. Speaker, just as we did during the lockdown, the government should also provide relief programs to ensure that financial support reaches those in need, streamlining aid distribution and supporting affected individuals and businesses. So, Mr. Speaker, before closing, I echo what the opposition leader mentioned in his debate regarding banking fees. I will highlight one recommendation in the letter the opposition leader read that should be considered for inclusion in any bank code of practice, that banks should provide a minimum of 60 days notice to customers before increasing banking fees. Customers should receive adequate notice of bank fee increases to allow them time to change to another bank if they wish to. And Mr. Speaker, as I mentioned earlier, it seems sensible that these increases should be vetted for fairness and approved by SEMA. Because when they all put a newspaper ad together or put an ad together or on social media or in the paper saying that they're all increasing the fees at one time, then that leaves you no choices to move banks. Collusion. The process for doing this would be worked out and agreed upon by the review committee, putting in place an updated banking code of practice, Mr. Speaker. And as stated before, if customers are unhappy with an increase in fees, opening an account at another bank could take at least this long. This notice period should be made mandatory in legislation. So in conclusion, Mr. Speaker, I urge the government to support and pass this motion, and we heard from the acting premier that they will support the motion. And once passed, I urge the government to act quickly and to start the process immediately to move this forward. Mr. Speaker, to all of my colleagues in this House, I say that by supporting this motion, we will be taking an essential step towards safeguarding our people's economic and financial well-being and reinforcing the trust between banks and their customers that we enjoyed during our generation. Thank you, Mr. Speaker. May God bless you all.
Does any other member wish to speak? Does any other member wish to speak? The Honourable Member for West Bay North.
Mr. Speaker, 2 beautiful days. Yesterday, to see us save our grandchildren a bill, and to see the special interest. People suffer yesterday, the stoppage of that dump deal was one good one. Today, just here, I got back here late because one of my constituents broke both hands and I had to go and help the situation. So I don't know who spoke on what, but since I've gotten here, I've heard that this bill that the opposition has put forward, a motion, and I just heard the deputy leader of the opposition said that there's been signal that we're going to support it, because I know I intended to. But what is amazing is that I remember, I believe it was the member from Bordentown West and Arden McLean bringing some motion, and the people who were in power for 8 years didn't seem to want to take on the banks. So it is so nice. I've listened for the last 3 years to all the things that we on this side should do. They had 8 years and had money. We were coming out of the pandemic and trying to keep the country afloat. So it is so beautiful to hear this Kumbaya movement, to hear us singing from the same Sankey book, and to show the country that this side is not doing what was done the last 8 years to us when we were in opposition. Because everything that the deputy leader said is true. I stand up in the bank in line, and I see a lady with a Cayman a cleaning lady with a Cayman Airways check. I stand up and hear the bank people tell her, "Ma'am, we cannot cash your check because this," and SEMA says so. Now, I believe I happen to know one person at SEMA. I believe I know one person. I picked up the phone and I called that individual and I said, "What kind of stupidness is this?" And the individual said, "That is not so. That's a bank decision." And right there in the bank, I said loud, "Excuse me, I just spoke to SEMA, and it's not, it's the bank." And you could see the bank people start to hold their head down. Because there's nothing out there. Everything wants to put the blame on government. It's blame the government time. And especially now it's the silly season, it's gotten worse. Yesterday, we got the story of a young Caymanian woman who from the time she was in high school, and she's not from West Bay, wanted to be a certain thing at the hospital. Studied, got the job, working on the job, got hurt, got all the paperwork from the relevant doctors, and in the middle of her probation, they fired her. Now, she's fired. So she now got no job, so she can't go get help. Now, I've just been told that it has changed. But you know who looked bad in that? Us. Everything at SEMA or any with the banks, people are blaming us. How can you tell me I put my money in a certain bank, Bank A, and now I make a check to John Brown? Bank A knows how much money I got in there, so if John Brown comes to cash that check in my bank where my money is, the bank knows, well, I have 500, so if you have a check for 100, you can pay it. These are nothing but foolishness. And when he said about the part, they're discouraging foot movement into the banks. And the deputy leader said 100% right. There are a lot of old people who are complaining they can't do online banking. They don't want to do online. All they want is to go and take out. Some of them wish they could still get a little bank book they could write in. So I am happy to see that we on this side are not playing the game like I've seen played before. Because it's one thing, all of the great concessions that was going on, they've tightened up. Under the former premier sitting over there were no big concessions, if there were any. And sitting over here this time with this present premier, there's no concessions and a big thing. So we have done everything to try to make things better for our people. And Mr. Speaker, this is one way we can do it. Our people are under pressure. And I'm so happy to hear. When you hear people that got money complain, you know it's bad. Can you imagine what the poor people are going through? And this moving of, when people have got a mortgage and all of a sudden it doubles. I save stuff on my phone. A young lady sent me something that there was a mother with a child. For the first time in her life, she's having a problem with food because with the electricity bill. The only thing that hasn't killed us is the water bill. The electricity bill, and the individual not running AC all the time. Then with the bank mortgage doubling up, said, this is my salary. Said, Mr. Burner, what I can do? Our people are suffering. And if this crew that's in here, all of us, don't play politics with this, we can bring people into line, because none of those banks are losing money in this country. They're making good money. So, Mr. Speaker, I too will be supporting this, and I'm happy to see, to hear that our side is not what I saw happen the last time, when, if I remember correctly, was this Mr. McLean or Mr. Saunders was told, go and meet one of my compatriots from West Bay. And I would bet, and I remember saying to the member, you think that meeting going to happen? And in lunchtime, I heard one of the members of the government say, you think we want to take on them banks at this time? Yes, but they expect us to. But we will. We will work with them. It's time for us to stop putting everybody else and everything else before our people. So I'm so happy to see this and to hear that everybody is supporting it. Thank you, Mr. Speaker.
Does any other member wish to speak? Does any other member wish to speak? Does any other member wish to speak? If not, then I'll invite the Leader of the Opposition to exercise his right of reply.
Mr. Speaker, thank you for allowing me the opportunity to wind up the debate on this important motion. I won't be long, Mr. Speaker. Not very much that I can add or say, but I'm feeling good. Notwithstanding the fact it's been a long week and we're down to the very end of it, but I think from my standpoint, I feel very happy that the acting premier has indicated he accepts the motion. I am pleased beyond measure to hear everyone who has spoken, both the government bench and on the opposition bench as well, that they are supporting the motion. Mr. Speaker, I don't know if the member for West Bay North was in here when I was making my presentation, but just remind them that I made these requests over a year ago, and I'm glad to see that fine now that they have gained action, and the situation is now that we can find a way forward and find that it is accepted by the government. So what really remains for us now is to put these things into motion and get moving on them. So I want to thank everyone, including two independent members of the opposition bench as well, who spoke very much strongly in favor of it, and a number of people on the government bench as well as my deputy, who ably supported my motion and highlighted other issues. Mr. Speaker, I just want to conclude my wrap-up my wind up here with just reading two small paragraphs from the document that I refer to in terms of the new consumer policy that the British government introduced in 2023. It reads, Mr. Speaker, setting higher standards and putting consumers' needs first is central to our strategy, and the cornerstone of this is the duty. We want to see a higher level of consumer protection in retail financial markets, where firms compete vigorously in consumers' interests. Firms need to understand their customers' needs and to have the flexibility to support them with certainty of our expectations so they get good outcomes. This is particularly important as consumers face increasing pressures, including those relating to the cost of living. Even before cost of living pressures emerged, consumers were being asked to make an increasing number of complex and important decisions in a faster and increasingly complex environment. This makes it even more important that consumers can make informed, effective decisions, act in their interests, and pursue their financial objectives. Those are all noble goals and ones that we should seek to embrace. We all want, I believe, to achieve and to see that we have a higher level of consumer protection in the retail financial markets. And I believe, Mr. Speaker, that by accepting this motion, we can achieve that. And we can hold banks to account and have them act more in the interests of their customers in seeing that they are protected as best as they can. Mr. Speaker, I thank you for allowing me to wind up, and I look forward now to the vote on this important motion.
Honourable Member?
Mr. Speaker, I just wanted to, through you, ask him if this also includes the insurance companies as well.
No, the motion doesn't cover insurance companies. Right. The question is, be it therefore resolved that the government consider requiring local banks to implement a mandatory updated banking code of practice using the UK's banking consumer duty rules as a guide to ensure bank customers' best interests are adequately considered in banks' decisions. And be it further resolved that if the banks are unwilling to enter into such a sufficiently robust updated banking code of practice, the government should consider preparing legislation to provide for a higher standard of banks' duty to customers using the UK's banking consumer duty rules as a guide. And be it further resolved that the government considers urgently reviewing and bringing forward an update to the draft amendments to the Registered Land Act proposed by the Law Reform Commission based on their review of useful reforms of the law to deal with the enforcement of mortgage-type security over real estate. And be it further resolved that the government consider requesting SEMA to review and report back to the Parliament by the end of this calendar year on the fairness of fees charged by retail banks and the fairness of interest rates paid on savings and other deposit accounts, ensuring that these rates and fees are fair and equitable for all customers. Those in favour, please say aye.
Aye.
Those against, no. I believe the ayes have it. The motion is accordingly passed. Honourable members, that brings us to the end of not just this order paper, but of all business submitted to the Parliament for consideration during this meeting. I thank you all for your able contributions and your unfailing courtesy to the chair. And I will invite the acting premier now to move the motion to adjourn.
Thank you, Mr. Speaker. I was hoping we would be able to conclude before the hour of interruption. We are there. just would like members to indulge just a few closing comments to thank all members for a compact, eventful week, but I believe we put in solid work for the country in this week. We grappled with thorny issues, but I think overall, aside from a few energetic moments, it was a collegial and collaborative effort. As the Speaker, still my first term, but one of the best experiences I've had in this term thus far was retreating to the committee room in a recess to go over the firearms bill and the committee stage amendments line by line with all interested members, working what are the red lines, what are the issues, what are the confusions with the Attorney General. I do hope we do more of it. It was highly productive. Mr. Speaker, I think aside from the agreed in writing PQs from the Honorable Premier who was ill, only one remains outstanding from the Minister for Planning, who has to fact check a few more stats. Mr. Speaker, the senior litigation partner referred to last night about fair agreements also taught me you never stop the judge when the judge is in full flow. So I have no cause at all to push against your admonishment on PQs, only just to say there was a global cyber event that wreaked havoc through the government systems and PCs were down. So some of us who had PQs really had a struggle to try to get them here Monday morning, but we resolved it as quickly as we could during this week. Mr. Speaker, I also want to wish our 2024 Olympic team all the best in Paris. Let's give them a nod. Minister Rankin left here around midday to accompany the squad, their family and friends. I know some of us can't wait to go and watch the opening ceremony. It looked, from the glimpse I saw in a brief lunch, to be spectacular. God bless you all. Represent us well. We love you. And Mr. Speaker, I hope Madam Premier is back to full strength. I'll check on her on the drive home. I just hope that we did her proud and we navigated her ship as best as we could in her absence. And finally, Mr. Speaker, we look forward to the visit of Speaker Hoyle. I've met him in my capacity as the representative for the Cayman Islands government for the UK. He's a fantastic human being who I believe all of us who have met us, member for Newlands has met him, for George, maybe almost all of us have met him, is a genuine person who cares about the OTs. And he'd always been promising he would visit the Cayman Islands. He's come through. So on that note, Mr. Speaker, I wish and move the motion to adjourn this honorable House to stand adjourned until Wednesday coming, 1st of August at 10:30 a.m.
Thursday.
Sorry, Thursday.
Thursday, the 1st of August.
Thursday. Thursday coming, 1st of August at 10:30 a.m., where we will meet Speaker Hoyle. And this House stand adjourned until then.
The question is that this House do now adjourn until Thursday, the 1st of August at 10:30 a.m. Those in favor, please say aye.
Aye.
Those against, no. The ayes have it. The House stands adjourned until 10:30 a.m. Thursday, 1st of August.